Welcome to the next lesson, and this time we will talk about imbalances. In one of the previous lessons about key levels, I explained five kind of price levels I'm focused on. There were volume spikes, point of controls, VWAP, value area high and low, and OHLC gaps. And imbalances are the number 6. I mention about this now because we can find imbalances only with footprint charts. I also want to mention that I do not use so-called fair value gaps, FVG, because for me it is guessing. Not every unfilled area between candles means imbalance. This is the print screen from TradingView and one of add-ons which automatically showing the fair value gaps. And I think that a lot of beginners who are trying to trade SMC with ICT concepts, they're using all these tools like smart money from Lux Algo on TradingView, etc. They have so much markups which are just in over 70% like to completely useless zones or levels. Really try to remember that not every area has a fair value gap. I hope you know what it already is. The unfilled, where the wicks didn't meet each other on the three particular candles, or like here, Here we also have two fair value gaps, but on the lower there were no imbalances. It's very balanced candle with a normal volume. But the algorithm on the TradingView will mark this as a fair value gap. Because this wick from that candle and the first one didn't meet each other. So it's unfilled area. But okay, on another one, there were wonderful stacked imbalances. Like even here, over 10 times more buyers than sellers. That was the true imbalance, very aggressive buyers. So this is, that's the fair value gap. But the lower one, it's just a normal candle. So I'm not saying here that SMC or ICT concepts are wrong, really nothing like that. Just please ask yourself how often it happened that you were waiting for some fair value gap and for buy, for example, and then the price easily broke that area, continued the sales. For example, if not this, someone would wait here. Even a lot of ICT traders use limit orders. Someone could place here limit, not on this chart, on this chart, limit order, and then was the thing, why the price broke this? That was fair value gap. No, this is just a simple candle with normal move, normal auction, just the buyers were very strong. Here on this candle were 10 times stronger, so yes, that was the fair value gap. So this is why I am not using this on my markups. In the past, yes, I admit this. But now, with the more knowledge I gained, I use footprint chart to always confirm. So if I see on the normal chart, the M15, M5, M1, something would look like the fair value gap with this concept, I always need to confirm this on footprint if there are really imbalances. Like for GU, there's zero imbalance in this tiny area, or for ES or gold, some stacked imbalances as a proof that really we can expect reversal here. But without footprint chart, this is guessing. We can make dozens of markups every day like this, and just guessing where the price will reverse. I know that the market structure matters here a lot. ICT have in his course dozens of videos about reading the market structure and where we can expect something, but simple marking this as a zones of potential reversal is just for me useless and waste of time. Better to focus on the facts. Yeah, facts are the numbers of filled orders to see if some move was aggressive or just the price move up or down. I'm not ICT hater, just to clarify. I just mean that this is trading the facts is logical and safer, definitely safer. How I use imbalances. Yeah, for me, all the imbalances creates the potential support and resistance levels. And in this case, it is a 6B chart and my old school way of finding the imbalances. Yeah, with the zero side and in a horizontal way. So 0 to the 23. And I have marked here support, which played out perfectly. And with cluster delta, you can automate this process, as I mentioned previously, yeah, with good settings. But on NinjaTrader, if I want to trade 6B contracts, I'm manually looking for my imbalances because it's working this way for 6B perfectly. Yeah. After my tests, I'm not using this technique on S&P and gold. I'm just using this on 6B because I trust this. I was using this for a few years and I just like this idea. Even if it looks like nonsense, why horizontal, blah, 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 why only zeros, but for GU, it's somehow working. Yeah, and as already some older members know, I'm doing the whole course by myself. That's why, yeah? After own tests, I'm not simply reselling the copy from some other courses or groups. So that's why sometimes you can find some strange terms like cheesy candle, deep invader, etc. But about it on the Geo course for MetaTrader, here I use different terms. And so yeah, as a summary, all I'm showing here is based from my own experience. I found this working for 6B and I will forever trade like this. But the market changed a bit. There are not so many setups like this, like I was trading 2-3 years ago. That's why I moved to the S&P ES contracts to see setups every day, not like 3-4 a week. But yeah, coming back to this particular one imbalance 0.23. One contract of 6B is worth £62,500. So I found that if in some price level there is at least 15, 15, not 50, 15 contracts on one side and 0 on another, it means almost £1 million traded on one side and no bid or offer on the other side. So in the example here, we have 0 on the bid and 23 on the ask. So the math is simple, yeah. 23 times 62,500, so it means almost £1.5 million by pressure appears on this price level. So yeah, I love to compare this with real money, not just a contract, but for me 1.5 million against no interest of sellers means really big probability that in the future or near future, so short term, this price is interesting enough, this price level is interesting enough to hold this. Yeah, so price can go up, trying to fill that imbalance to check if more buyers, like delayed buyers or late buyers, want to join in this same interesting price level where 1.5 million in this case buy pressure appeared. So please, no confusion here about how much is worth one contract, because what we see here are full contracts. What we trade, like 6B or ES or GC as gold, these are mini contracts. Yeah, we can choose between mini and micro contracts. So mini as a 6B, what we see now. So one contract as a, for 10 pips, it is worth just 62.5. And micro as M6B, 10 times less. So we are really, really little fishes in the ocean, and we trade different volume. What we analyze are full contracts. So I don't think any one of us is able to trade such money. We trade mini, usually mini, but if you have smaller account, less than 500, you probably will choose micro contracts. But in the basic knowledge, in theory, one contract of 6B is worth £62,500. That's why I calculated these imbalances. So at least 1 to the 15 means almost £1 million pressure for buys or sells. And by saying about imbalances, I want to mention here also about the candle structure on the footprint chart. If we are talking about these zeros. Please do not use the first and the last cluster. These are saved for so-called finished and unfinished auctions. This is something new. I didn't mention it previously. On some courses you may also find this as finished unfinished business, not auctions but business. So in theory, if here is a 0 on one side, on top or at the bottom, it's a high probability of reversal. This price level that no one had interest to continue the auction between bid and ask. So if there are numbers on both sides, like here 6 and 10, 10 to 2, this is called unfinished auction. So high probability that the price will go here in the near future, that this level will attract the price to potentially finish the auction and decide where the price wants to go. But as I said, this is only the theory, and I don't use this. Sorry. So to find the imbalances, you should be always focused on the middle part of the candle. Not middle, just without the first and last cluster. And now example on more volatile asset, my favorite one, ES, as S&P 500s. Here the process of marking the imbalances is automated. Same platform, but different way of looking for imbalances because this is different asset. The tool uses here diagonal way of finding them. So here's marked 81 on the buy side because it's way more than just free. The free hit 81, and this is marked as imbalance because it's few times more than on my settings. And with all honesty, I need to admit here that to find more imbalances, I changed the value on the settings from 200 to 100. That was the first lesson about, not first, the second lesson about settings on my tools, on MZ Pack tools. So 200 in this setting is for more picky traders who wanted to see definitely bigger differences between buyers and sellers. And I use it when I don't feel the market. I want to see stronger key levels, but also if my chart shows too many imbalances on 100, then I would also switch to 200, yeah, because I don't want to see mess on my charts, like every few ticks there's a zone of potential support or resistance. So then I would switch to bigger value, to 200, to make some filter. So as mentioned on the previous page, on slide, imbalances creating a great support and resistance levels. So on 6B I use 0 imbalances, but here on ES and GC as gold, I use stacked imbalances. So if here's just in one cluster, in one tick, there's an imbalance, I don't use this as key level. I would like to see at least 2, because that means for me that the move was sharp enough. So many orders appeared that one tick wasn't enough. Yeah, so even here is better support because appeared when we have 3 stacked imbalances. So amazing. Yeah, this could be stronger and better key level. Of course, this tool, MZPack, draws the zones automatically as well. Not only marking this on the candlestick, on footprint, but also draws the zone. And here comes also a little example why I don't even think about finished auctions theory. Take a look on this one. Price reached the resistance. Yeah, here the area of stacked imbalances. And in these 3 candles, the 3 following candles, there is a 0 on top. Maybe this is very small, maybe that one as well, but 105 to the 0 is big enough. So someone could think with this theory, following this knowledge, that yeah, okay, now it's time for a reversal, especially when there are some rejection weeks like here and here, the zeros, perfect, yeah. But suddenly the price came up higher, so this trader could be kicked out. I'm not focused. I have big respect to everyone who use this theory of finished auctions. I know personally few of you. You make good money on trading Nasdaq and ES as well. But somehow, maybe it's my bad luck, I always see the price action and footprint charts with zeros on top, and then prices anyway going up or down. Like, this is invisible. I'm not sure, I just stopped being focused on this. Also, too much knowledge is no knowledge. So I just removed this from my criteria, entry criteria. I just have no interest if there's finished or unfinished auction. I don't care about this. This is just an example, of course. You may find someone who will explain it to you that this is the best way of trading, waiting for finished business. But I'm not this guy. I just ignore this part of knowledge. I don't use it. Really, a lot of time every day I can find examples that this didn't work. Maybe the reason is here also the law, which I mentioned on the supply and demand lesson, that when we have 2 zones close to each other, there's the very high probability that the price will reach higher as well. Yeah? Here we have zones, and the difference between them are just 2 ticks. Yeah, here's one cluster, here's second. So 2 ticks difference. Maybe that was the reason. I don't know. I really just don't focus on this. Yeah, okay, so this is about key levels as imbalances. And yeah, imbalances are the only one key level I am looking for entries. So not only TPs. Yeah, the previous one like volume spikes, VWAP, I forgot, a point of control. Yeah, they're always my TPs and only sometimes entries. really sometimes. But imbalances from footprint chart are also my lovely entry levels. So these are the most important key levels for me because they are TPs and entries as well. Okay guys, let's go to the final lesson about absorption. Finally absorption. Before I will show you all the puzzles together, how my trading looks like from A to Z, like marking the zones, finding bias, and looking for entries and TPs based on the footprint chart. Thank you for watching, and please do not forget to ask questions on the Discord. Yeah, we have the special channel, the course related things. If you are confused until now, it's a good moment to ask questions about footprint or any question, because after absorption, the most important lesson, we will start the training, the true training with the live price action. Thanks for watching and see you soon.